Welcome to the Diary of an Apartment Investor podcast. I'm your host, Brian Briscoe. Very excited for today's show. I've got my good friend Jonathan Twombly on with us today. So, Jonathan, how's it going today?
It's going good. How are you? I'm glad to be on the show and good to catch up with you.
Doing very well. Yeah, it's been a while since we talked.
Yeah.
So, I remember when we were last physically face to face. It's been about a year in Vegas and we had dinner together one night. But anyway, really good to catch up and even better to do it on a podcast.
Absolutely. Looking forward to it.
Yeah, so do us a favor, tell us a little bit about yourself. Rewind the clock long way before you got into multifamily.
Well, I had a fairly long career in law
Mhm.
before I got into multifamily. So I'm here in New York. I grew up in the New York area. I've been in New York, basically since 94 when I started law school and was practicing law. I was doing commercial litigation here in the city, like through the dot-com boom and bust. And it was like crazy times. I mean, people were working like dogs. Kept on throwing money at us because people were leaving to go to dot-coms. And so like the people who stayed behind were like, they were throwing more and more money at us to like not go to dot-coms. And like, but then every time they gave us a raise, they'd turn around and be like, okay, you just got a raise. You got to work harder now. It's like, why don't you try giving us less money and making us work less? We'd probably stay if that were the case. But anyway, just got really burned out, because of that whole kind of cycle. And after 3-4 years of being a lawyer, I started to just get really unhappy, but I couldn't figure out what I wanted to do with my life. So I kind of made a few sort of stops and starts. I kind of just quit, burned out, left the job, couldn't figure out what to do, went back. And finally, I decided I was going to just chuck the whole thing. And I went back to graduate school and was going to get a PhD and then got married. So thought, okay, I should quit this, went back to law. Finally, that sort of like cycle of like quitting and going back and quitting and going back ended a little bit after the great financial crisis when the work just really dried up at the firm that I was at. And I had been doing real estate litigation at that point. So I was working on like hotel deals and all kinds of little, and fallout from the crash and all kinds of stuff. But the work just sort of dried up. So I spent sort of 2 years actually sitting at my desk with nothing to do, making like $300,000 a year, sort of waiting to figure out like what was going to happen and why they kept on paying me. And during that whole time, I basically was like underwriting deals all the time because I decided I was like, I got to get out of here. I want to do real estate. I don't know how to escape from this job. And I would just sit there and like look at triplexes in like upstate New York and try to figure out like, okay, how many of these would I have to buy to replace my salary? And it was like some ridiculous number, like, to have to, keep on clearing $300 a month or whatever from these, it's like I'd have to have, like 100 of them before I could even think about leaving my job. But the problem got solved for me because I did finally my firm decided that they didn't want to pay me $300,000 a year to learn how to like underwrite triplexes, and they let me go. And at that point, I was so burned out from law. Like I had described it as I couldn't go get another job in law because how are you supposed to interview for a job that you don't want? Like how am I supposed to convince an employer to hire me when I don't want them to hire me? So
it's like, I really don't want to work here, but will you please give me a job anyway?
Yeah, exactly. Yeah. I realized the futility of that. And fortunately I had some savings and I didn't have to immediately go out and find another job. So I started thinking about what I wanted to do. And I decided I wanted to break into real estate somehow. And of course, like my mindset coming from like a big law firm and everything was like, oh, I'm going to go work for like a fund. I'm going to go, be an institutional investor. So I started doing all this informational interviewing and just kept on running up against the same thing over and over again, which was, you're too old. You're not going to be able to break into this business. Like no 30-year-old manager is going to want to tell you that you have to stay late and work, when you're like 10 years older than them. And like the only way you're going to break into this business is if someone just takes a liking to you and decides to be your partner. And then that happened. So I was doing all this networking and I met this woman who was like, I'm starting a commercial real estate firm. And I was like, oh, this is interesting. So let's talk. So we started talking about it. And she was like, why don't you become my partner? I think you might be able to raise money. And I was like, A, I don't know if I can raise money. It doesn't sound like I'm very comfortable doing that. And B, like, I don't really know that much about you or whether this makes any sense or whether you know what you're talking about. So what I'm going to do is I'm going to have some of wealthy friends vet you for me, right? So I basically went to a couple of wealthy friends of mine and said, hey, I want you to talk to this woman. What do you think? So we all met. She kind of gave them the pitch about multifamily real estate. As it turned out, that's what she was doing. And the upshot of those conversations I had with these friends was, well, I don't know what you want to do, but if you decide to partner up with her, I'll give you money to invest. So, and it was like real money. It wasn't like $50,000. It's like, I'll give you $1 million. So I actually wound up, so she was right. I could raise money. I raised $2 million without trying. So I decided, okay, maybe I better, maybe the universe is telling me something, right? Like people told me the only way I'm going to break in is if I get someone asked to be my partner, and then two people offered me $1 million each to invest. Maybe I should try it out. So that was how I got into the business. It was just completely accidental. If those conversations hadn't taken place, I don't know what I'd be doing now.
It sounds like the stars aligned, which is, absolutely amazing. So I had some stars aligned. It wasn't $1 million checks, but, it was similar. But, I think part of it is you end up finding what you're looking for, which happens a lot.
This did actually come back to bite me in the rear end later, though, which is that because I had these two big investors, like, and this is kind of fast forwarding many years, but those guys like invested heavily in my first several deals. And I basically started counting on them and assuming that they would. And then one day they stopped. Right. And so, and I hadn't really built an investor list before that. So suddenly I was out over my skis where I had like a deal under contract, and both of these guys decided that like, yeah, no, I've kind of got enough multifamily for now. So I lost a deal. It was a terrible experience, really great deal. I couldn't raise the money. I was out, some of my EMD, and it was great to have those guys to start out with, but I didn't like use them as runway the way I should have. I sort of relied on them too much. So
yeah, that makes sense. And do you think part of that was, what do you think kind of played into that? I mean, were you said you were just assuming it was going to keep going? Was it partly attributed to you being new to the business, or? Yeah.
I mean, I think a lot of it was that even though I had success raising money from those guys, I was not comfortable raising money. So I didn't really go out and actively seek to meet other investors.
There we go. Yeah.
So because I still was really uncomfortable with it. So I think a lot of people, if you're out there thinking like, oh, you have it easy, you could raise money, whatever, like, even after having raised a couple $1 million, I mean, honestly, I still don't like raising money. So it's just something that you just have to do.
You have to do, yeah.
It was just purely like me avoiding doing what I needed to do because I didn't actually have to at that moment. But it was very short-sighted in retrospect.
I see the same thing in me a lot. Do I enjoy raising money? The answer is no. I enjoy everything else about the job. I can consistently bring in 1 to 2 million on any given deal, but that's just me with my personal contacts. I'm not a huge money raiser, but at the same time, if I could pick one superpower to have, it would be that ability to raise money, just because it's so important in what we do. So we talked about, you mentioned this deal that went south because you couldn't raise money. So you had some initial success, deal went south. Let's kind of pick it up from there and talk about progression after that. How did things work from there, and how did you kind of reset?
That experience was kind of searing, right? And it really knocked my self-confidence for a loop. Right. Because I mean, it was a great deal. It was actually from a seller that we bought another deal from. And, they would have been happy to keep on selling to us future deals because they were like professional rehabbers. Right. So their whole model was find a distressed property, completely rehab it, and then sell it. And we were long-term holders. So it was perfect for us. Yeah. But my self-confidence took a big blow. And I have to say, I didn't go into that feeling super self-confident anyway. So it was a big psychological blow to me to lose that deal. I kind of like went into a little bit of a hibernation at that point. And then I decided I needed to somehow do something about like finding investors. And at that point, I just really leaned into social media. And I built at the time was the biggest multifamily Facebook group there was. And through that effort, I was able to build a pretty decent sized list and launch my coaching program. So a lot of good sort of came out of that experience ultimately, because it did force me to learn how to kind of do social media and stuff like that. By the time I got through that, I was feeling, though, pretty, I would say, stressed out about how expensive property had gotten, right? And it was just feeling really just like I couldn't compete or wasn't willing to compete. I mean, we're starting to see the kind of like hard money day one and like all this sort of stuff. And it just wasn't comfortable doing those kinds of deals. And so I really kind of pulled back and just sort of sat on the portfolio I'd built. After a while, that got to be, I would say, not super tenable. I sold the portfolio, right? Exited, had a good exit for everybody. We sold at a good time. Everybody was happy. I made some money myself, but then I was kind of just coaching, and it's like, well, what am I going to do now? Some of my friends started reaching out to me to ask them to raise money. And I was like, okay, well, I built this investor list. I might as well, start raising money. So there are a couple of people I raised money for. So I did that for a number of years, just helping friends, fill out their capital stack.
Yeah.
And then in 2022, and I don't want to get ahead too much, but 2022, I sort of stumbled into the hotel space and started doing that. So, I mean, I don't know if you want to go there yet or talk about other stuff, but that,
Yeah. So the transition from so I guess you're in the owner operator position, right?
Yeah.
To capital raise. Let's just talk about some of the differences between the two positions, because I think a lot of people listening are kind of in the spot where they're like, do I want to, be the guy in control of everything, or do I want to just be the capital raiser? And I say that with air quotes because of SEC, broker dealer laws. But let's dive into that a little bit and just kind of go through why you transitioned from, I mean, you mentioned just a little bit deeper on kind of what you were doing on one side versus what you were doing on the other side, why that made sense for you.
Yeah. I mean, for me, I never really wanted to be a capital raiser. That wasn't my goal. I like being an operator, and I prefer, if I had my druthers, I'm like you, if I were able to just focus on doing deals and running deals and not raising capital at all, that would be my preference. But I found myself, like late 20 teens, where I just felt the market was really overvalued. And this is even before COVID, right? When things got nuts, I felt the market was overvalued. I felt people were willing to pay more than I was willing to pay. They were willing to agree to terms I wasn't willing to agree to. And I just didn't feel like I could find good deals under those conditions. So I sort of decided, well, look, some of my friends have a better deal sourcing operation than I do, and I'll just flip roles here and go on to the capital side. It wasn't really like an intentional thing, like I'm going into the capital side. It was just more that people reached out to me and said, hey, look, you've got this investor list, would you help? And I was like, okay, this makes sense, because I've got this list I can raise, help raise from now. I mean, honestly, I would say just for my personality, I think like my job satisfaction really started taking a downturn at that point, because I was focusing, mostly on the thing that I like least in the business, which was raising capital. I guess maybe if you want to call it an upside about being a capital raiser, is that like once your capital raise is done, all of your heavy lifting is over, right? But for me, I don't mind the other stuff, right? I don't mind the rest of it, and kind of like the rest of it actually, as opposed to just raising the money. I'm not sure I really answered your question there.
There's plenty there. I think that was perfect. And I was just kind of reflecting, when I started this podcast, and when we first met, I was with Four Oaks was the company. And when I left that company, I mean, slightly different circumstances, I left that company, and the first thing I thought was, I want to keep on doing multifamily. What's the easiest way to do it? And the answer was, I'll go raise capital for a couple other people. I can raise money. And it was kind of the exact same, I mean, very parallel experiences where, I raised capital for, a couple of deals, and it was just like one of these deals started not doing well. And for me, I was in a position where, I came from a company where I had control over the deals and I had control over what was going on, to having no control. And that was what was uncomfortable for me. Was raising capital, could I do it? Yes, but at the end of the day, what do I like doing? I think end of the day, I wanted to make sure that I could deliver more than anything else. And that was the thing for me, but it sounds like a parallel, but
yeah. And I do think too, that like when you mentioned before, like if you could have one superpower, it'd be to raise capital. I talk about this with my students a lot. Maybe you talk with your students about this too, but there's like really a big personality difference between the capital raiser personality and the operator personality. And they're really very different. I don't know of any good operator who's also good at raising capital. And the people who raise capital really well, they don't seem to know what they're doing on the operations side at all, right? So they've got these great machines to raise capital, but then you read about them in the real deal for the wrong reasons, right? So like a great team would have both of those functions
Yeah.
really dialed in, but they're going to be different people. No one person has got both of those skills.
Yeah. And you know what? I think you hit the nail on the head. Why would I want that to be my superpower? Because that's my biggest weak point right now.
Mhm.
And when I think when anybody looks at this game, how do you determine how big of a property you chase? How do you determine what size property you get into? The answer is how much money can you raise?
Yeah.
How much money can you bring to the table? The more money you can bring to the table, the more deals you can do, or the larger deals you can do, or both. And so, what our biggest headache is, right now, and it could be partly, I mean, it's definitely market driven, but biggest headache right now is just raising money.
Yeah.
So, a lot of that is market driven and nothing to do with, my ability. So,
Yeah.
but
And I think everyone's struggling because I'm having a struggle raising money right now. I mean, this is what everybody is going through,
mhm,
right? And so I mean, it's funny, like I'm starting to have conversations with people. Like I just had a conversation with somebody who's a pretty experienced syndicator, but a lot younger than you and me. And he was just talking about like, I can't find deals. And I'm like, it's not you. Like the market is really slow
yeah,
right now. Like, don't beat yourself up about this. And I think it really is a market-driven business, and it's cyclical, and like you just go through these periods where it's hard to raise capital, it's hard to get
mhm.
deals done, and you just have to be able to wait it out.
Here's the reality. I'm hyper focused on Salt Lake City, but kind of here's the reality of the deal flow. We got 3 new deals sent from one of the brokers we're working with last week, and neither one of them were new deals. It's
Mm.
like, yeah, we saw this a year ago. He's like, yeah, I know, but I just wanted to see if you're interested in it still. And it's like, has the seller come down in price? Not really, but okay, so when we're seeing what's available, there's not a lot available, and every once in a while we'll find a seller that's willing to come down on prices or meet us halfway. It's hard to transact and it's hard to raise money, but what I keep on looking at is if we are able to transact right now, this is the best time to buy. The
Yeah.
hardest time is typically the best. If it was easy, everybody would be doing it, and it's not easy, which means if we're the only ones transacting right now, we're going to be getting the deals that are out there.
I mean, listen, it's never easy, right? That's the thing. It's like either it's hard because there's no deals, or it's hard
Mhm.
because everybody's doing deals and they're hard to get deals. But it's never easy. But there are good times and bad times to be buying. And I think this, like you said, is a good time. And I think it's going to stay good for a while. I mean, I think that the market is going to be slow to come back. It's
Mhm.
going to kind of grind forward. And during that grinding time, a lot of people are going to drop out because they're going to have to go get other jobs. And the people who are able to kind of like cobble a few deals together between here and the time that the market reaches a new equilibrium and things start to pick up again are going to really benefit like when the market picks up. It's kind of like the last man standing, right? I mean, if you can be the last man standing, then you're going to do really well once things pick up. So the game is to like just get here from here to there.
Yeah. Yeah, I guess that's why a lot of people are saying, survive till 25 or whatever that is. So, I mean, you said you exited all your multifamily. I know we got some boutique hotels that we can talk about, but I was very fortunate. And when I say fortunate, it wasn't fortune, it was, risk aversion. But, I ended up getting a lot of properties with fixed rate loans and nothing with variable rate bridge loans. So when you look at where I'm at right now, I'm in a much different situation than a lot of operators that are having distress. Yeah, the nice thing is I'm in a position where I can do that. I'd hate to be in a position where I had a couple properties going south and trying to juggle those right now. But anyway.
Yeah, and lots of people are, and this is a big reason why I was basically out of the market then, was because I would never do personally a deal that wasn't fixed rate. But I've
Mhm.
raised capital for deals that are not, and I'm seeing kind of from the inside how stressful that is, right?
Mhm.
But when I raised money for those deals, there's with people I trusted. I figured that they understood how the forward curves worked. I mean, there wasn't something I wanted to spend all my time learning about, because the people that I was working with was like, they were really serious about how all this stuff worked. And I thought, okay, they're smarter than me, and they've got it figured out, so I'll trust them because I know they have integrity.
Yeah.
And still feel they have integrity, right? But the whole kind of moving from fixed to floating, just for me was another signal that the market had gone beyond a place where I could compete
Mhm.
personally, or was willing to compete. And that was another reason why I just sort of stayed out. And then, getting into hotels was sort of like a little bit of an outgrowth of that, just in a very different direction.
Yeah. So let's talk about the next transition. You've done a couple of hospitality properties. So let's talk a little bit about that. And, we probably spend a couple minutes on that, and then we should be wrapping up.
Sure. So that was kind of like an accidental thing for me. During COVID, my wife and I bought a house in upstate New York
Mhm.
where we used to always vacation. And in order to get to this house, we would have to pass by this one particular hotel
Mhm.
that was just like in this spectacular location with these amazing views of one of the lakes,
Mhm.
and just like really run down and tired. And we just kept on having this conversation like, man, somebody ought to do something with that place. What a shame. Look at the view they've got. And I was poking around on Crexy and LoopNet to see if I could find multifamily deals upstate to
Mhm.
buy, because I was like, I got to do something. And maybe there's something small I can buy up here. I'd like to spend more time up here. I came across that hotel for sale. It had been on the market for a year, and they kept on cutting the price and cutting the price and cutting the price. And I was like, you know what? Maybe I ought to be the one to do something about this.
Mhm.
So I went and found somebody who knew something about hotels, who's now my partner.
Mhm.
And I went and found, just one investor that was willing to do it. I didn't want to put debt on the property because I didn't want to take that risk. So we did the whole
Mhm.
thing for cash, and did a complete gut renovation. And I guess we just passed right around right now, we're entering our third year of owning the hotel. The renovations were completed last year, but this is our first year of first full year of post renovation operation. The place is doing great. What I learned from that experience was that there are deals out there that you can buy at a really low basis
Mhm.
if you're willing to roll up your sleeves and get your hands dirty. And this asset class in particular, it reminds me a lot of multifamily when I first got into the business, where there's a lot of mom and pop operators, not
Yep.
a lot of people like us doing, what we do. A lot of assets that were just, that were operated by people who just to make enough money, right? They didn't operate them to maximize their revenues. They operated them for a lifestyle. And now that generation of people is retiring or dying, right? And
Mhm.
they're mostly boomers, and even older than boomers actually. And they want to exit these assets, and their kids don't want them, right? So they've got to sell. And there's not a lot of people who have the expertise to go and like do a complete rehab on a hotel and then operate a hotel. So it means that the competition to buy these is very limited, and oftentimes like none. So I find it's a great opportunity. So we like that experience so much. Went and found another one in Vermont that we bought. We're going to, fingers crossed, if our containers can get into port, we will be finished within the next couple of weeks on
Mhm.
that second one. And yeah, I'm looking to do more. I really like this space, and I just see a lot of opportunity in it. So it's been
Yeah.
good so far.
I've got to jump into that comment. If our containers can get into support, I assume you're buying a lot of supplies from overseas.
We're not technically vertically integrated, but we
Mhm.
have some very close partners that we work with. So like, for instance, the design firm that we work with, and they're also investors in this deal. They own a factory in China. So everything's being manufactured, for us in the factory. But we've had some issues where first there was a traffic jam at the Panama Canal.
Mhm.
Now there's traffic jams at the ports. So we're just waiting for all of our stuff to arrive so we can finish the renovation and open up. But it's there. It's just sitting outside the port.
Yeah.
So waiting for a slot.
Yeah. It's amazing how that shipping industry works. It's something that I've always found fascinating. By the way, if you're interested in that type of stuff and you've never been to the Panama Canal, man, you get down there. It's pretty amazing,
It's
But
funny because my partner was just there. Like,
Mhm.
his wife took him on a surprise birthday visit to Panama, and so he was at the canal, and of course he's asking the people at the canal, like, "Hey, what's going on?" With the
Like, can we get
ships.
that one through
Yeah,
right now?
exactly. Yeah, my container is over there. Would you please let it through? So
Yeah. I was down there just after the 100th anniversary of opening. So I was there in 2014, but just missed the anniversary by a little bit. And when they were building that third lane, anyway, it's when you said traffic jam there, I do remember, sitting out there and just looking at, a horizon with a bunch of ships just like in line waiting to get through. When you mentioned that, it brought that picture to mind. And it's at the time, this is before the third
channel,
channel was
yeah.
built. I think there was like a 7 to 14 day wait to get through, and it was definitely a money game involved. The more you paid, the higher priority you were to get
Mm.
through. But Anyway, it's fascinating, but story for a different time and a different podcast. But as we wrap up, a couple questions to throw out at you. And first one is, what's next for you?
I'm going to do more hospitality for sure. I still like the multifamily space. I just, like everyone else, having trouble finding value there. But I think as I get back into multifamily, probably smaller deals rather than big deals, looking to do, would really like to start getting to the point where I don't really need investors, or just maybe just have a few investors, do small partnerships like
Yeah.
with some friends or whatever. But I'm not there yet. Started looking at some RV parks. That's kind of an interesting asset related to hospitality as well. So, I'm kind of open-minded about where to go. I just want to go do stuff that I find fun in places that I like to
Mhm.
go to, and where I feel like I can add value and make money.
Awesome. Next question, kind of more speaking straight to the audience, if you had to give some advice to somebody who is just getting into the business, what would that be?
I would say, don't quit your job like I did. The opportunity to have a paycheck as you're building a portfolio is pretty powerful, because you
Yeah.
you can turn your income into future income. And
Mhm.
that's something I wasn't able to do because I wasn't working. But you really have this like stream of income that you can just turn into net worth. And so maximize that. And also don't get seduced by all this stuff on social media about doing big deals. Like, do small deals, do deals that you can do yourself or with like one or two friends, and don't worry about syndication and investors and stuff until you've actually got a track record and you really feel comfortable with what you're doing. It's going to be a lot easier for you to raise money and go bigger once you actually got your chops kind of honed. So start where you are now, start where you can, get started, and don't listen to all of the chatter out there about how you should go big fast.
Yeah, and I think going big fast is a recipe for disaster. I
Yeah.
mean, I agree with that, going big fast. If I had to point my finger to one thing that we didn't do super well at Four Oaks was, we did get big fast. I mean, we went from 0 to 700 units in a year, 8 different properties, a year and a half, but 8 different properties, 700 units, and it ended up being a lot to manage, but I saw a lot of people hit that 700 unit mark a lot faster, but it is nice, to be able to to pack in a lot of units. And, if you're doing syndications and acquisitions fee, you can make a lot of money doing that, but you got to do it responsibly. But
Yeah, absolutely.
anyway, and then last question, how can listeners learn more about you?
So these days I'm very active on LinkedIn. So LinkedIn is a great place to connect with me and follow me. And I'm always happy to talk with people in the comments, or even DM me. And I also do have a coaching program called Apartment Investors Club. That's hosted on the School platform. So if you go to school.com, that's SKOOL.com, you can find Apartment Investors Club right there with a whole description of what it's all about.
Awesome. Awesome. And we'll put links to both those things in the show notes. But anyway, Jonathan, thanks for coming on the show today. We had a great time catching up and talking with you, and best of luck to you.